long offer. He's up in my left-hand corner. If you don't, stand, wave, please. Stan has been doing this with our market area for what? Since I've been here. So,
yeah,
and I know
10,
longer than
12
that.
years now.
Yeah. As you all know, he puts together the forecast, and that's usually presented, or always is presented at the state conference. So this sharing time gives him an idea of what he's needing to know about what you're seeing in the market. And with that, I will just be quiet and we'll get started. Thanks for coming.
Thank you very much, Linda. Actually, sometimes I feel like part of my job is to sit and listen to what all of you have to say and then stand up later and repeat what I've heard. And then all of you think that I'm really smart because I know all this about the market when all I'm really doing is repeating. Seriously, these roundtables are really useful for me as I prepare for the annual forecast, because I see the statistics, I see the big picture numbers, but sometimes there are differences in how those things are interpreted, and knowing what the people who have their boots on the ground and how they're responding and seeing buyers and sellers makes a big difference in how I understand and interpret those numbers as we go about doing the housing forecast. So I'm really grateful for it. As in the past, when we're there together, I have a handout that I like to go through. And so this time it's virtual. I think you were sent copies of this, but if not, we can make sure you get copies of these to give a little bit of the underlying economic and housing market data there. So you should, can you all see the graphs there on the screen now, and that's there? Give me a thumbs up or nodding of yeses. So from an underlying economic standpoint and what's going on in the market, the COVID has brought together the most stunning graphs for economic graphs that we could ever imagine. So this top graph here is the total non-farm employment, which is the jobs numbers, the numbers that whenever you hear about employment. And I index these, meaning that I say, let's take the employment at the beginning of 2008, and let's let that equal 100. Every other number is relative to that starting point. And then the reason I picked January of 2008 is because that's right when employment peaked nationwide prior to the onset of the Great Recession. And so you can see here that the United States fell tremendously down from a level of 100 down to about 96 by the beginning of 2010, which meant that we lost 94. So we went from 100 to 94. We lost 6% of our jobs between there nationwide. Following that, we had a recovery and employment grew and grew and grew. And we got up to a level at the beginning of this year of 110, meaning that employment was 10% higher than it had been 12 years earlier. And then the shutdowns and these changes that we're seeing, we have never seen anything like it, not even in the Great Depression. They are stunningly sharp drops. And even with the sharp increases that we've seen here over the last couple months as the shutdowns have eased, you can see that total employment numbers in the United States are just barely above where we were back in 2008 and far below where we were at the beginning of this year. And so the blue line on here is the Topeka metropolitan area. And for those who don't know, that's actually a 5-county area around Topeka, including Jackson, Jefferson, Osage, Shawnee, and Wabunsee counties. That's the official Topeka metropolitan area. And you can see that the recovery was never much of a recovery in Topeka, and you all felt that and knew that. It was a combination of both private employment and public government sector employment. But the shutdowns have been severe and really sharp in mirroring that pattern. Similar pictures for unemployment rate, which focuses on people rather than companies. And On this chart, I've also included Lyon County to try and capture the broader part of the Sunflower MLS, where you've got the folks down in Emporia. And those Lyon County statistics are not seasonally adjusted. So you can see a bumping up and down in that, but you can see the underlying trend. And as I recall, this is the Twinkie factory right here that had that spike up there in their unemployment rates. But once again, once the shutdowns hit, really sharp spike up in unemployment rates in Lyon County, as in everywhere. So some of the other statistics that again, my purpose in looking, oops, sorry about that. My purpose in looking at these at the beginning of this is just to give us some framework and some common figures that as we discuss the market, you can tell me if you think this is something that is relevant to any of this or not. Mortgage rates. You all are very familiar with mortgage rates. The only thing that I like to highlight in this is that the Mortgage Bankers Association's latest forecast right now is for the 30-year fixed mortgage rate to stay below 3.5% through the end of 2021. Would you have ever thought we'd have rates as low as 3.5%, let alone stay below that for another year and a half? The graph on the bottom is your Topeka area home sales. That's the entire Topeka area, which is the Topeka metropolitan area, plus anything in the Sunflower MLS from Douglas County. And the blue bars are the actual sales, whereas the red line is a moving average to kind of smooth through that. And then as some points of reference, at the request of your board office, we've been we're creating some new areas to match your region. So the North region and the South region that we've included here. So just you have a point of reference of seeing the same figures for the North region and the South region as they work in your MLS. And then finally, I've got some measures here on, not finally, two more. Month supply, a measure of balance in the market. And at the top, I show the numbers for the Topeka area, kind of that broad greater Topeka, the North region and the South region, and then the orange line is the US. And what we can see here is that inventories in Topeka throughout the Sunflower MLS, but also Kansas as a whole, have been much tighter than they've been for the United States as a whole. And never saw, the US saw a little bit of a spike in inventories when the shutdowns occur. We didn't see that kind of an impact. Things only got tighter when the shutdowns happened here in Kansas. And we are at the tightest levels that we've ever seen. And then broken down by price range, this is just for the Topeka metropolitan area. And the big thing I wanted to point out, which again, I'd like for you to discuss, is the differences among different segments of the market. That even though inventories may be very tight on average, there can be sub-markets where that's not true. And I'd like to have us have some discussion about that to kind of see where we think we're going to go. Last kind of couple of pictures that I have here. Just yesterday, the Federal Housing Finance Agency came up with the second quarter home price appreciation figures. And you can see that home price appreciation slowed a little bit in Topeka here in the second quarter. Last few quarters, it had been really spectacularly fast appreciation, 6% on an annualized basis. Most recently here, it's about 3% or a little above 3%. That's still a really strong appreciation rate in Kansas. And finally, the building permits numbers, these are based off of the Bureau of the Census. Once again, I indexed this to start at the beginning of 2006, which was the peak of new home construction nationwide. And you see the sharp, sharp declines. Topeka has continued to bounce around this 25 to 30 level, meaning that number of building permits right now are at about 70% lower than they were prior to the onset of the Great Recession and the downturn that we had in the housing downturn. Still have never really picked up from there. So again, you should have copies of that, a PDF file. I think Denise sent that to everybody here this morning, so hopefully you have it and you can reference it, but I can bring it back up if we need it. In order to kind of move into the roundtable discussion then, I'd like to begin with the polling that we did last year. And I thought that worked really well. I hope you found it interesting. And so if you go either on a web browser to the website, pollev.com/WSU Real Estate, you can do it in any web browser, or if you just want to text from your phone, you can text the word WSU Real Estate to 37607, and it will send you back a message saying you're connected, and then you can just text the responses to these questions as we go through things. So let's start with these word clouds, which I think are a really useful way to facilitate kind of the beginning of our discussion. If you were to describe your local real estate market, wherever your local is, in 1 or 2 words, you've got some flexibility to throw in a couple extra words if you want to, then tell me how you would describe your real estate market. So let's see what responses we have here. Demanding, inventories, multiple offers, low inventory, steady. Looks like we've had 3 people reply. I let you reply more than once if you want to. So I allow people to have kind of a couple different responses.
Stan, I don't mean to interrupt. This is Mike
Please
Trepay.
do, Mike.
Hey, I'm having a hard time getting my text thing to go, and I felt like you went pretty fast, and I'm not able to get through. So
the instructions are right up here at the top of the page. If you text the word WSU Real Estate, all one word, to 37607, it should send you a text back that says you're connected. Anybody had success with that yet? Just to confirm. No one's done the texting on it yet. So I've tested it before, but I didn't test it. I got Ivan did a thumbs up. So Ivan got it that way. So multiple offers, low, steady, demanding, stressful. So very good. Well, let's start by kind of sharing a little bit as to what, and you can keep putting in your words. I'll keep looking at these and we can all see them. By the way, so you know, if you've never worked with these word clouds before, that big word strong, that means that more people responded and used that word. The more frequently it's used, the bigger it shows up in there. Strong, competitive. So somebody who said strong, what did you mean by it? Describe what you mean, and I'll let somebody jump in here.
this is Mike. I'll step in. I put very strong. This is the best that the Topeka market's been since before the Great Recession started, at least for new construction.
Very good. Someone else. Go ahead.
I agree. In fact, I'm seeing exact same thing as we were in 2006. I mean, it's just exactly like that, right? And 6 and 7 offers per buyer, and, you know, competing with 8 or 10 offers.
Does it make you concerned at all that maybe there's a bubble that's about to pop or something?
Definitely.
Okay.
I would like to add to that I'm not sure I'm as concerned, because as we recall back to how the market was before the Great Recession, we haven't in the Topeka area been anywhere close to that. So we've had a long period of time where I feel like we've underserved the market, at least in terms of new construction, and have only recently now got to a point where the conditions are right to really ramp up. And I think it'll take several years before I'm concerned about how hot the market is.
Okay. Okay.
Stan, this is
Go
Brian.
ahead,
I think
Brian.
the other thing that's different about now than 2006, that when we had the meltdown, we had large inventory of homes for sale, and now we have such minute inventory for sale. I don't think we're going to suffer a decline in market values or buyers. I think there's still a pent-up demand among buyers that we have not been able to satisfy with inventory, and I don't know why.
So, yeah, very good. Very good.
I have a thought or a
Go ahead,
question.
Luke.
I know that inventory is really low, but I haven't looked at demand or sales, the number of sales per year in comparison to now and 2006. So are sales also really high, or are they lower than they were before? Like, is there more buying to happen that's not even being realized right now?
That's an interesting question, and let me throw that out for people to respond. And then I'm going to pull up a picture here so while we're talking, Darren, did you have comments on that at all, or somebody else?
Well, I was just going to say, I think with the recent sales we've had people who have been $5,000 and $10,000 and $15,000 and $20,000 above asking price. So yes, they've gotten the home. As long as they are in it for a bit, and if they're not, we're gonna run into the challenge of, I need to sell that house in a year. Something happens 2 years, and they are going to be at or below water level in some cases, just because of the demand we've had in the last 2 months.
Mm-hmm. Mm-hmm. Let me show you a picture here real quick, because as a part of a thing with the Kansas Association of Realtors, we've been trying to track actually on a daily basis when all of this started, particularly active listings and newly listed homes. And you might find this interesting. So this is a weird graph. Let me explain it. What I've done is I took 2019, which is the red lines, and I matched it to the same day in 2020. Now it's a little bit winky, what a great word, because remember the calendar shifts every year. So I tried to make sure it was a Monday matched with a Monday, a Tuesday matched with a Tuesday. So it shifted by, I think, 3 days because of leap year and some things like that. But what you can see is with closed listings, up until during the midst of the shutdowns here early, closed listings really didn't slow down very much compared to 2019, right? The blue lines were at the level or above the red lines in the early part. And you can see here more recently in the last part of this summer, closed listings on a kind of a day-by-day basis, closed listings in the Topeka MLS are the Sunflower MLS are outpacing the same day last year, most days. Now I'm gonna transfer for a few different graphs here, and let me. So this is newly listed homes, first time put on the MLS based on the list date. And what you can see here is that when the shutdown happened mid-March, all of a sudden we started seeing newly listed homes sharply lower. Blue lines are way below the 2019. Since then, it's evened out a little bit more, but more often than not, new listings are slower than the pace that they've been last year, even after the shutdowns have come down. And then I also did it for contracts written. And once again, you can see during the shutdown, which was some of the peak buying times, contracts written were much lower in 2020 than they were in 2019. But since then, contracts written have been at least as high or higher than they were last year. And so what all that kind of translates back to Luke's question is that it's been, demand has continued to remain strong. It's been supply that has been very tight. So hopefully that was interesting and useful. I don't usually like to try and put something in, but I know that's a picture you may not have seen here, and so I wanted to chat about it.
Did you do one by volume too? To
I've
see?
not done that by volume. That would be an interesting question. I'd have to believe volume would look very much the same because prices have been going up.
Yeah.
So someone wrote down here, stressful. What did you mean by stressful? What's becoming stressful about the market? Was that you, Sally?
No, but I agree with them because of multiple offers and not winning, you know.
Actually, I'm the one that had put stressful on there. I'm in my first year or two, or excuse me, first 2 to 3 years of real estate. And I think for me, the most stressful thing is still being able to properly represent your client and advise them. But sometimes I feel uncomfortable when they're going above and beyond asking, just because we don't know what the market's going to look like in about 2 to 3, 5 years. And are these people making decisions that they may not be happy with in the long term?
Okay.
What I meant by that.
Excellent. Very good. Well, let me move on to another question here with the poll. So I'm going to move to the next question here. And so this question is, in 1 or 2 words, describe how sellers are being affected by COVID. How do they feel? What are their responses? What's different, or is there anything different based on the pandemic and the issues there and how they're dealing with things, how they perceive the market? Scared. Awesome. It's not anymore. Shut. Concerned. So the person who wrote, keep sending in your responses. The person who wrote awesome, who wrote that, and what was your thoughts?
That was me, Mike here. And when you're building new construction, you don't have some of the same challenges that COVID has placed on people who are selling existing homes. And with the inventory having shrunk quite a bit and interest rates being really low, it's created a lot of demand for new construction. And so as a builder, it's a great environment and really does make me think back to 2006 and enjoying trying to get this product up fast enough to help people find a place. And there's people that are struggling to find places. So in our instance, it has been a good thing.
Well, there are always winners and losers in any kind of change in the market. And so that's good to hear. And yes, I can imagine how you are freed from a lot of the concerns, at least, of going into, showing a model home versus an existing home. So so we've seen some cautious, scared. Someone wrote shut. Was there a particular thing you were thinking of with that? I will start calling on names. Darren, go ahead.
I was getting ready to say, I was trying to get my microphone off. They just shut down. Like if they were afraid to have people in their house at the very beginning, so they were looking to potentially, they would have been in the market to put their house on spring, summertime, but they weren't sure who they wanted to come in and not. And so they stopped. We had a whole group of people who just said, nope, time out. I'm not going to do this right now. I'll look and evaluate down the line, but I'm not going to do it now, which you look at those graphs. And that's exactly the time when you saw the shutdown because people were afraid of what was going to happen. Could have been job related, could have been health related, could have been something that happened up or down in their life. And they then created the demand or lack thereof for the groups who needed to buy and move through the market. Very
good. So after the shutdowns and after we got a little more comfortable with what's happening, I'll get right to you, Luke. Hold on one second. Darren, did you see those people who said, I'm putting it on pause Did they come back or are they still on pause?
No, you'll see there's certainly a good group of people who did come back, and that's where you see your graph spike up all of a sudden. There's still a few, but not to the extent. They now see, with the state, I'll speak specifically to Kansas and even the local, having opened up the market around them, that gave them then some hope and stability to move and get their house on the market.
Very good. Luke, you had something you were going to offer there.
I was going to say, I wrote vacant, and 18 out of the 21 listings I've sold this year have been vacant houses. And I've had sellers that actually move out just so they won't be in the house when the house is being shown because of family's health or something like that. And I was going to look through and see how many of the ones that we bought were also vacant. And then I wrote, it's not anymore, because I have clients listing their house this week that are living in the house and they want to have an open house next weekend, and I'm not doing those right now. So
Okay.
both ways.
Okay. Now, the people who were vacant, who moved out, were they pretty confident that it was going to sell in a matter of days, or?
To some degree, and I just told them it's a lot easier. It might be on me too. I mean, I tell them it's a lot easier to sell if you're not there and you don't have to worry about all of the cleaning and all of that kind of stuff. So I guess they must have been confident to follow that advice.
Right. So I want to give a couple kind of housekeeping notes here at a brief pause here. First of all, something I forgot to mention at the beginning. I am recording this session. However, what I will do is we will keep that and make that available to the Sunflower board and let your board office decide. Is that something that you want to just keep, not distribute? Do you want to distribute it to your members only? Do you want to make it publicly available? I will do with that whatever you wanted, but I thought it might be nice for us to have the archive. And you probably saw the recording, and I wanted to make sure you know that nothing will happen with this without your board's approval. So make sure you're aware of that. And then the second thing is that all of the summary of the polling that we're doing here today, I'll save that as a PDF file and send that to your office so that your board can distribute that to everybody who's participated, and if there's others you want to share it with, so that you can see all those results, and we'll have that together.
I just sent your handouts in case anybody didn't get those. They should be in your email box.
Thank you very much,
if,
Linda.
if you want those, they should be there.
Excellent. And the last thing, I'll just warn those of you who have your cameras off. That's okay. I understand that. I do that too in Zoom meetings, but that doesn't mean I won't call on you and ask you for some feedback and questions. So just be prepared that you could hear your name and make sure that you're there to respond. Anybody else? Katie, what did you write down in this particular box?
Sorry, couldn't unmute it.
Yeah.
Well, I don't list homes. I work for the building association, so I didn't actually put anything on here. But from what I'm hearing, as far as people that are calling us and wanting work done on their homes, this has been the busiest time since I've been here in the office, which has been about 3 years. So people being scared to do stuff, I haven't come across that. I have several people calling, looking for homes to be built, looking for homes to be sold. And, we just hand the referrals out as the calls come in. But from mine and Ivan's standpoint, we have been extremely busy.
Yeah. So you kind of concur with what Mike has said, not just for the new home construction, but also the remodeling business.
Absolutely.
Yeah, very good. Anyone else want to share in terms of sellers and how they're responding to that? Well, let's jump on then to the next, and I'll bet you'll never guess what my next question is going to be. My next question on this is how buyers have been responding to COVID. And again, I always think it's helpful and interesting to understand the differences in the psychology of the market. So 1 or 2 words How are buyers responding in this market, specifically to COVID and the impact of the pandemic? So eager, excited, frustrated. Rushed, leery, worried, third offer, I think is what came in there, realistic. So who put in, I think it was third offer as kind of two things. Who put in third offer?
I put they're realistic when they're making their third offer, because they've been shut down on the first two offers when they just, tried to buy a house at like list price.
Yeah.
And they, after, and that's the thing that's also really, really tiring for our agents, is they have to make so many offers that don't get accepted. And that's demoralizing for buyers who think they're making a good offer, and then they don't get the house. And it's it's not simple to make an offer on a house, so it's tiring for our agents that have to make offer after offer for buyers. But if they get turned down a couple of times, they kind of get with the program and say, oh yeah, I got to offer. I shouldn't ask for 6% contribution from the seller towards my closing cost. Yeah.
Okay. Somebody wrote leery. What was the response there? Was that you, Luke? Go ahead.
Yeah, I also wrote eager though too, so I have both kinds.
Yeah.
They're eager because they want to buy before the economy crashes, and then they're leery because they're not sure if they want to buy because they think the economy might crash.
And is that more fearful of their own personal situation, or is it more thinking that the economy will crash and then I'll have bought at a high price and I should have waited?
The latter of the two there.
Okay.
Or yeah, they would have bought at a high price. That's right.
Okay. We've got here stressed and worried, frustrated. Somebody who put one of those down, want to respond to what you were thinking there?
Well, Stan, I want to clarify that I typed in not worried.
Not worried, okay.
Yes, and they are definitely ready to make stuff happen. They, tired of messing around, and they'll get to the point, get this negotiated. And we're selling stuff now before we're even done with it, just because of the tight supply. So the buyer has really stepped up, and I feel like maybe not as a whole, but generally they get the situation we're in, and we're not getting beat up nearly as much as we normally would in regards of what it costs to construct the homes.
So I'm curious with this, so we've got buyers who are really eager, they're stressed, and I'm guessing stressed is primarily about being able to get the home that they want. I got a nod there from Sally. And yet we saw the jobs numbers and the unemployment rate numbers, and those are historically high figures. So how do you rationalize those two facts about the market right now?
I wonder if the unemployment is of people that weren't going to buy a house anyway. Like you're thinking, I think a lot of, and I don't mean to stereotype servers and people that work at restaurants or anything like that, but I rarely sell a house to a server. And I think those are a lot of the people that are probably unable to work, is my guess.
I think that's an interesting, unemployment by occupational category and home ownership rate by that occupational category. There may be a real correlation there in those.
I would agree.
That was very economist speak. Go ahead, Mike.
It was better than what I said.
I would agree with what Luke says on that. I've noticed the same thing. We have high unemployment, yet we have a bunch of people who want to get into homes. And so as I thought about what their occupations were, perhaps a lot of these people are in starting positions and they weren't quite ready for home ownership. And so we haven't seen it affect us, whether it's existing homes or new homes at all. I mean, we're seeing it from what everybody's saying, we're definitely seeing a demand. In fact, you almost wonder, are there more people entering the market? Why is that?
Right.
I'm a-
Go ahead, Gary.
Yeah, I'm a little concerned about some of those who may be in the, not the higher range of earnings, but with the multiplier factor of money. A lot of those in the long run are supporting those who are now buying. And so you wonder about the upstream flow of the money. If it's $1 spent eventually 7 times, that will eventually catch up with some of those who are now maybe financially enough well off to make expenditures. But I worry about the upflow of the funds.
Yeah. Will the hardships among those who are being pressed most right now then translate down into additional layoffs, additional hardships for those who aren't as concerned, perhaps? I would count myself as a university employee being one of those people where right now I feel pretty confident, but where that translates with state funding and situations, maybe I'm going to be feeling a lot more pain a year from now than I am right now, personally. So that's a fair question. I'm going to start calling on some of you with your cameras off. So I'm going to ask Roger, do you have any thoughts to share about buyers and how they're responding to COVID?
I don't know whether I'm showing up now as having
You
trouble with technology to answer earlier questions. Yeah, buyer demand is strong. They're not too awfully concerned about the COVID, and really just echo what everybody else is saying. And I'm kind of wondering why with the unemployment the way it is, but there's still plenty of demand. My concern, whether this is a time to talk about this right now or not, is money is too easy to get once again with little or no skin in the game. And I don't know whether you're going to address that at some point, but I just wanted to mention that. Thank you.
Well, actually, I think this is a perfect time to address that. So, Gary, can we turn it over to you since you're making loans, they're too easy loans. So what are you doing to make that better, Gary?
If that's directed to me, I'm not making lones. Okay.
Oh, I'm sorry. I was.
Yeah, that's a whole different.
I'm sorry. I was thinking you were a lender. My mistake. I
No.
knew better than that.
Usually Tim O'Shea's on board, but he's not here today.
Yeah, Tim was supposed to be
here.
with us today. Oh, there
Sam,
you are.
I'm here.
Tim, talk.
Okay, Tim, I'll let you take it then.
So, this is a unique time, I will say that, because what we're running into, and we've learned some hard lessons, is we start the application, everything looks great, then we schedule the closing and we verbally verify their employment and they're laid off. It's like, well, we got a problem, because I can't make a loan if you're not working and stuff. And we've encountered that several times. So the other thing, and Luke and Darren, somebody talked about it earlier with the vacant homes. The vast majority of apps I'm taking are without the sale and close of their current home. And it's like, yeah, that's fine, but you got to qualify for 2 house payments. And most cases they do, sometimes they don't. There's a swing loan or a bridge loan, which is another type of loan to try to gap it and stuff. But we're seeing it's an odd time because I have some contingency apps going, but it's rare. Mostly they'll go buy their new home and then put their house on the market. And again, they're moving pretty quickly, but sometimes they don't. And the customer calls me 6 months down the road and they don't like 2 house payments. And I tell them, I didn't tell you you're going to like it. I said, you qualify. There's a difference on that.
Are there certain price
That's from a
ranges that you're seeing
lender's
more
viewpoint.
What was the question
What's
again,
that?
Darren?
Sorry, I was just going to say, are there certain price ranges you're seeing that more than not with the bridge loan and the dual loans?
The again, over 100,000 is the common loan or sales price. I guess we're seeing 100 to 250 is real common. But I will say that I've seen some big loans this summer. If we get above, I think it's 550 for a loan amount, that's classified as a jumbo, which our guideline changed quite a bit. And I've done half a dozen of them since the pandemic started, which in Shawnee County, that's unusual.
Tim, I read an article in the New York or the Wall Street Journal earlier this week about lenders that were beginning to require some new documentation that basically was a statement by the borrower that they did not intend to take payment or foreclosure forbearance in going forward. Is that something that you all are doing or that you've seen happening in the market?
I haven't seen that. When this came about, there's a regulation that any mortgage loan we have on the books, the customer calls in, we don't have to prove it or anything. They just say, I'm struggling because of the coronavirus. And then we can give them, I don't know what the regulations are. I think it's up to 12 months of forbearance. It's added on to the end of the loan then.
Right.
And the last I knew, about 25% of our portfolio was in forbearance.
Wow.
That's a little bit of a concern because that's a big chunk of change not coming in right now.
Yeah, that is big. That is big. Do we have any other? I don't think we have any other lenders on the line with us here today to share. So Roger, did your question get answered by that at all, or you still have those concerns about easy money?
I didn't hear any answer to my question as to why. I heard some other great answers, but I don't know that the problem's necessarily been solved. And I think what Tim just mentioned, and that number, I guess, shouldn't be so surprising with 25% in forbearance. That may at some point take care of our inventory problem.
He did mention that the jumbo rules changed, and it sounds like jumbos are higher than they used to be, meaning that loans below 550 are not jumbo anymore. I thought it used to be like 450 is what I had heard in the past.
Yeah, Luke, that changed a couple years ago, and it's those are Freddie Mac and Fannie Mae guidelines. But I'd have to look for sure, but I think it's a loan amount, not the sales price, but loan amount of 550 becomes a jumbo, which our guidelines get more restrictive. The interest rate goes up 0.25%, and we require 25% down or more. So, because it's just a bigger risk loan.
I mean, that's sort of an indication of loan restrictions easing up, because that means that you require a 25% down when the loan is a higher amount than when it was before, right? I mean, and that's kind of what Roger's question is. If you're a borrower, is it easier to go out and get a loan now? Can you have a lower credit score? Do you not have to have as many assets in the bank? You know, what is that what you're asking, Roger?
Yes.
I don't think Tim does that anyway. I kept fed.
I'll tell you, we get memos every other day on guideline changes, so try to keep current with everything. But I know we've changed to, if they don't sell their current home, we want to see more reserves, liquid reserves available on that. And God, I'd have to go back through some memos and stuff, because a lot of stuff has changed here in the last 6 months. A lot of stuff has changed.
Didn't we see some tightening of FHA and VA guidelines, and there were less loans out there available in the middle of this? I don't know if that's changed in the last few weeks, but I know for a period of time, I'm having lenders say we were struggling to get an FHA loan through.
For a while, I heard. Oh, go ahead. Sorry.
But we don't do FHA here anymore, so I'm not sure.
Yeah.
We're offering VA loans, and I know the VA loans got more restrictive. I don't work with them directly, but I'm familiar with the guidelines. But I know VA loans have gotten more restrictive.
Yeah.
Luke, you started to ask a question.
Well, I was going to say, for a while, I know Vision Bank wasn't doing FHA loans, but I thought it was like March or April, and I thought it had to do with, I think they said they just didn't have time to process them, but it seemed to me like maybe there was some uncertainty there. That was never confirmed. You know, they never said that. And then I forgot what my next point was. Sorry.
Never happens to me. Well, let me ask a slightly different question right now, which has to do with segments of the market. So we've talked a little bit about it being a really hot, very tight inventories and so forth, but tell me about segments of the market where if you have a seller who comes in and says, you know, hey, I know that everything's going gangbusters, I want to sell, and you have to have the hard conversation with them. Where are you seeing there be challenges in terms of different segments of the market?
I think I don't know if it's segments, it's just being realistic, because they hear their neighbor sold their house for $10,000, $20,000 above asking price, and we're talking on anywhere from a 130 to a 170 price house, which you wouldn't see that in a normal market. So then their expectations are just set, in some cases, unrealistic.
Okay. Okay. Gary, now I can come to you.
Yeah, I think.
Go ahead.
Oops.
Go ahead. You.
I think the expectations, that they're going to get a premium dollar, are, founded by what the neighbors have done. What I've found are some issues with what goes to the MLS and what goes through as a for sale by owner in developing good comps. And then there are certain other avenues we can approach as far as getting statistical data. So I think it's a paramount that would be accurate, but I'm not sure we're getting good, accurate current data entirely from the MLS. So we need to look at other outside reporting agencies or reports to make sure we're close to being on target.
What percentage, and maybe that's too precise of a way to ask it, but are you seeing an increase in the number of properties that are being sold as quasi-pocket listings? Essentially, before they actually even go on the MLS, maybe you've got a listing and you've got some buyers that you've been working with and you're able to match the two together before they even go on the MLS. You're having a sense that that's happening with any more frequency right now?
I don't feel like I don't feel like it's happening with any greater frequency than it has been. I think in some cases it's probably less, because sellers if they are in the market and they do want their house on the market, they want a bidding war. So they don't want to take in some cases, if they don't want to just have the process done out of the way, I don't want to think about it, I need to get rid of this and move on. That's a group of people who will take a pocket or who will just sell on the first one. There's others in the group that in the marketplace who want to have those 3 and 5 offers so that they can raise the price up as high as they can. So.
Okay. Demetrius, were you going to say, I thought you looked like you had an idea of something you wanted to contribute with that.
No, I was just nodding my head in agreement to what Darren was saying.
Okay. Sally, do you have any thoughts about that in terms of segments of the market that are doing better or worse?
Well, I'm shocked that I've got $500,000 buyers that I can't get properties for because there just aren't any. I've got one, we're under contract, but I literally text a bunch of agents that I thought might have this type of property, and we saw one before it went on the market and wrote on it. And the only other one I was able to show her, I went back to something that hadn't sold 5 years ago, and I called them and they said yes, but they didn't want to put it on the market. And that is literally all I had to show, a $550,000 buyer. And I did get her under contract, but
and so then you called Mike about building a home for him custom, right?
You didn't have time, Mike. She's living in a hotel for 30 days.
So another question that I had about your local market that I'll kind of throw out to anybody who has some thoughts on this is, the state went into all of this relatively flush with revenues. I've got a colleague here in my department that's on the Revenue Estimation committee, and the first half of the year, there were, really good revenues up and above projections, and that the state had pretty good surplus. But it's pretty evident that state revenues are going to be severely impacted going forward. What kind of concerns does that have for you for the real estate market as you go forward in the coming year, in terms of, how much that may impact employment levels, or whether there may be furloughs or other things that impact? I mean, you're heavily impacted by state government employment. So thoughts about that?
One concern I have particularly is that Topeka just had a housing study done, and they just finished up the tail end of it. And we already had low inventory just due to historical nature of our city. And so if you're looking at possible economic impact, how is that going to affect the growth of our city and some of the things that need to happen to address just the discrepancies we've had in housing before any of these things with coronavirus happen? I think it was a great study, and I would love to see more come about out of it, but it's kind of like, I feel like it's kind of up in the air just due to the nature of our times.
Sure. Tim, I think you maybe were about to share something there.
No, not at this time. I'll speak up again.
Okay. Amanda, we haven't heard from you, so I'm going to put you on the spot there and see if you have anything you want to share about that.
I'm sorry. I had fires I was putting out with.
That's
new
okay.
agents.
Hey, if you can close a deal and make sure a deal goes through, you should be doing that and not talking to me. So.
Oh, I'm listening. Trust me. I don't really have thoughts. I do agree with Demetrius. I am interested in the housing study and kind of how we can implement that more. But right now, that would be hard. So.
Right. Luke, any thoughts about kind of the local market with respect to state budget issues and where that will go going forward if there are significant revenue declines?
I mean, really, you just kind of scared me, Stan. Now I want to know what you have to say about that. I really hadn't thought about state workers at all and their employment being in jeopardy. And that's directly flies in the face of what we said earlier about the lower segment, or the, economic segment, whatever you want to call it, not being homeowners, or home buyers. Well, the people with the state, those are home buyers and homeowners. So I don't know, it might spur sales, if people can't afford their mortgage and they can't, whatever you call it, what's that, take forbearance, maybe they'll decide that they need to sell and put their house on the market, possibly downsize. There are probably people who are thinking of retiring, who are thinking that, like, all right, my income's going to go down, so it's time for me to downsize. There'll probably be more of that going on. That's my thought. But now I want to know what you think, Stan.
I'm still trying to figure it out. I would say the one good thing with this compared to past downturns is that if we do see a significant decline in demand because of employment levels, inventories are so tight that it really could only bring us into a balanced market. And so it's not going to create a severe, I disagree with some of the national stories that you see of people projecting home price declines next year. I think, worst case scenario that we have for Kansas is going to be home price appreciation that's sluggish, but that's actually not very unusual for us in Kansas. I just don't see declines happening. And I think it's more likely that we'll see appreciation, but I haven't run any numbers or anything on it.
Yeah, I think if we get to a more balanced market, that will certainly impact appreciation. But a more balanced market means that we're doing a lot fewer sales. That would be of a concern to me. I would be more concerned if I were in a university community, Manhattan or Lawrence, than in the state capital.
Yeah. So Tim, I did want to come back to you about that forbearance issue, and I think it relates to this. Do you have any sense that that was a high number of loans that you had in the forbearance program? Do you have a sense as to whether those are situations of people who are just trying to take advantage of a program that's available, hey, I'm eligible, I might as well take advantage of it. Or if it's related to people who truly are stressed and that when the forbearance ends and they have to start paying it, that could translate into delinquencies and default. Any sense of that at all?
Well, I'm not in management, but management has talked about it, so word dribbles down to us. You know, it's one of those things. Uncle Sam says we have to do it, so there's not much choice on our side. I think there are some people that, I don't know, I'm not going to say take advantage of the situation, but they're not struggling. But the vast majority of them that are calling in, they lost their jobs. And again, this would have been early in the pandemic, March, April, and May, when the biggest bulk of those came in. I think it's slowed down quite a bit since then. But I'm sure there's a few people that said, well, heck, that's a gimme, I'll just take it. And it's, the payments aren't eliminated, they're just added on to the back end of the loan is what happens.
Right.
On that part. But again, there was a lot of times I got a good friend, he and his wife are both let go from their job on the same day. They have 3 little kids, and I'm going, gee, man, Christmas. There's a lot of things to worry about here, but all they have to say is they're having problems with the pandemic, and we do the paperwork for them.
Okay.
Yeah, and the forbearance part, is it the principal and interest payments, or principal, interest, taxes, and insurance, or just principal payments?
It's the entire payment. So they do not make a payment to us for, it's either 6 months or 12 months. I can't remember. A lot of things change on that.
Yeah.
But so what happens, we get to December, their escrow will be short. And again,
yeah,
we'll cover all that and stuff, but it will eventually get picked up on that part. So there isn't, like I say, Uncle Sam says we have to do it. There isn't a whole lot we can argue about on that. But like I say, there are a lot of tough situations out there because there's a lot of people that got let go. And Luke said that earlier again, whatever you want to call it, lower paying jobs, a lot of restaurant workers or whatever are out of work and stuff. And again, some of them are homeowners and stuff.
So Luke, you had something to add there?
Tim, would you approve a new mortgage for somebody who took forbearance on their old mortgage on their previous house?
We can't consider it derogatory credit because it shows up on their credit report, but there's words or codes or something that tells us that's a forbearance. And so we cannot consider it derogatory, but we do want an explanation, what happened. And usually they lost their job for a time being on that. But if they're back to working, we can verify the income, then they should be good to go.
Linda, you started to say something?
Well, I guess I took your question in a different direction when I started thinking about it. I was wondering how unemployment, which is going to be loss of income to the state as far as income tax and other areas, I was thinking, what is the state going to do to homeowners? I mean, they love to come after the property tax anyway. So that's where my thoughts went first.
Mm-hmm. I did have some questions, and people had asked me about property taxes and what would impact in values. And of course, because property taxes are assessed, kind of in arrears, they're based on the past, that even if property values were to decline, it really wouldn't show up until tax payments next year for that. But I don't anticipate that property values are going to decline. Now, residential, commercial property values will get hammered. And state revenues associated with commercial property values will be difficult because you've got all sorts of issues going on in terms of negotiations with landlords and their tenants in terms of being able tenant come in, I can't make any payments, I don't have any money, I've been shut down, can't make the payments. And for the most part, the commercial property owners that I've been speaking with are really trying to work with their tenants and do things and do the right thing. They're frustrated with their national tenants because the national tenants are just trying to bully them into all sorts of things. But the local tenants they're working with a lot. But if they're not getting the same rent, if they're having deferrals, they're going to be appealing their property taxes, and that's going to go down. So that's the side where I think property taxes will hit the state. The state's less able to increase the mill levy because it's also local, right? It's more the local community. Will your county or your city change the mill rate in response to things? And that's just a local issue. So
That would be a Steve question.
So go ahead. I'm sorry, Sally, go ahead. Ask the question.
Oh, well, I just thought that would be a Steve question. What is planned for what's happening?
In terms of that. So Steve, what do you have to say?
Well, I agree with you, Stan. I think it's going to be interesting on the commercial side. So far, our residential values are climbing. I'm a little nervous about how high they're climbing, only because it seems like the public that is not active in the real estate market believe the market's crashing and everything's in trouble. Sales aren't showing that. So residentially, they're doing well.
So people are coming down to the office with pitchforks and torches.
Yeah. Yeah, and we try to avoid letting them in if they have pitchforks, but the commercial side we haven't seen yet. I'm nervous about it. I'm sure property owners are nervous about what's going to happen, but it hasn't manifested itself yet. You know, everyone knows that it's so easy to work from home now. So what about the office market? Is it going to take a big tumble? I think the jury's still out. Interestingly enough, the state doesn't catch that much of their revenue from property tax. That's generally local governments. I know there are some counties in northeast Kansas that are taking some furlough days to try and eliminate some of the need for tax increases and to replace revenue. I would think most of the state, most of the county employees are probably deemed essential. And so I don't think there's going to be a great loss in employee revenue reduction.
Yeah. Yeah. Well, we got about 20 minutes left. So let me go to the last part of my survey here. And this is where you get to tell me what is going to happen with the forecast for next year. So what should my forecast read next year? And so the question that you should see up now on the screen is, what will home sales do next year? Do you think so? In thinking about 2021, over the course of the next year, or 12, 15 months, are home sales going to be a lot stronger? Are they going to be higher, but just a little bit higher? Basically flat? Will they be down just a little bit, or are they going to be tanking, going way, way down? So let's see. We've got, trying to remember how many people we've got here with us here today, but 19 participants, so should be able to get at least 15 responses in here with this. So jump in and give me your thoughts. Got 6 results. Got to get a couple more in here. We can do that. I have at least one person who said way, way up, that you thought it was going to be much, much stronger next year. So anybody want to be bold and, oh, you changed your mind. You changed your mind on that. Here, I was going to ask what your thought was on it. So let me take one of the other answers there, and down just slightly. Somebody who thinks it's going to be down next year. Why do you think it's going to be down? Go ahead, Luke.
How can it be up? I mean, there's no way it can be better than this. Like, as far as selling stuff goes, I mean, I don't know. I don't understand how that could happen if we're having unemployment issues. So that's my thought.
So somebody who said up, but just a bit, what was your thoughts behind that?
This is Brian. I'm for up. We missed our spring market this year. I thought with any luck, spring might happen in August and September. And now the August and September here, I don't think that's right. So assuming that we get a responsible solution by January, I think we will have a strong spring and a solution to the epidemic, that we'll have a stronger spring, a normal spring at least, which will be stronger than this year, and that'll give us a little bit higher sales next year.
Okay. Mike, what did you put down?
I put up higher by a bit, and the reason I put that in there is there's still, in my opinion, a fair amount of unmet demand, and at least in regards to new construction, it takes time to make stuff like that happen. And I think it's going to take us well into next year to even come close to meeting what the current demand is. If I had more homes up, I guarantee I'd have them sold right now. And so just because of the timing of this, and just, as you change what it is that you're doing, it doesn't happen overnight. We have lots to develop. We have homes to build. They take a while. This is definitely going to go into next year, unless some unforeseen catastrophe happens. But I don't know how long this will go, but at least I feel strongly about next year.
Okay. Roger, what did you say?
I didn't, but I would question, when you say up, do you mean volume or price?
So I'm speaking here volume or units, number of sales.
Okay. And yeah, slightly higher.
Okay. Have a couple people there that we haven't heard yet. Janelle, are you still there? I had Janelle there for a while. Maybe we lost Janelle on there. So sometimes people come in and out, and I miss that and go forward there. Well, let me go to my next question, which you said, do I mean units or price? In this case, I meant units, but I also want to ask about new home construction, and it's deactivated on me. So let me make sure that gets activated and full screen. And so new home construction next year, do you think building permits are going to be through the roof? Pun intended. Modestly stronger, about the same, down just a bit, or don't ask? So what do we see here about new home construction in the Topeka area? And it looks like there's reasonable amount of consensus there with modestly stronger. That was probably, I think, expected, and certainly ties in. Katie, did you have anything else you wanted to add in this particular area that you're hearing from your members or anything like that?
I would just again agree with Mike. The need is there, the want is there. You can't build a house in 30 days, so it does take longer. So he's going to have a waiting list along with other builders that are going to go well into next year, that they can't fulfill those needs right now. If, somebody's looking to buy a house, they might settle for something that is not exactly what they want, but then they're going to call a remodeler to get what they want in that house. So I think, on both sides, building and remodeling up, we're going to see it modestly stronger.
Very good.
I'd like to add something to that. Oh.
I just wonder, are all of these, majority of them going to be custom homes as opposed to spec homes? That's just a question.
They're going to be a mix. Right now, we don't have any home that's done that's still for sale, and we're reduced to selling homes that are in the drywall stage. So we have that demand, and then we have a lot of calls coming in for customs as well. So that continues. And I think I wanted to add something to this. What we're seeing is that there's definitely a lack of existing homes out there for people. And so they're left with few choices. And so interest rates have been so low. I mean, I just heard of somebody getting 2.5%, that these people are now able to reach a lot higher than where, maybe they were a couple of years ago. And it's allowing us to sell new homes. This would be more starter level homes than we had previously. So just an interesting set of events that have really bolstered the new construction market.
Very good. Any other
This
thoughts?
is Brian. Yeah,
Go ahead, Brian.
I think we could be through the roof if we just had more mics around. I mean, Katie and Mike are better to answer this, but I feel like if we had builders who could build a home for under $250,000, we could sell those till the cows come home. I mean, there's a segment of buyers out there, and especially since we've seen some increase in home prices in Topeka, where the leap between existing housing and new construction isn't the huge leap that it was. And there's a whole group of people that don't want to buy a house that's got a carpet that somebody else's dog has pooped on. And so they want new construction. And we just don't have enough inventory of it. And I think we could go through the roof if we had more inventory.
Let me add to that, yes, we can produce houses under 250, and they go very quickly. Our other challenge is we finally got to a point where we've used up most of the lots that were put in prior to the crash. And so we've started doing some developing, and the first phase we did, we don't have very many lots left in there. We're trying to get the next phase going, and then we're working on a second subdivision. And just the time to do that, from the time I say, hey, I think I want to do this, to the time you're ready to start homes, it could be a year and a half, and sometimes it can even be longer. So these are the things that I feel like, yes, it's frustrating I can't build and meet that demand this second, but I know that it's going to push that on into the future, so that each year as I get this stuff ramped up, we'll be able to continue to sell homes, because that demand still won't have been met unless a bunch of other people start developing. But I don't know if, I can only control what I do.
Very good.
The other thing
Go ahead,
I would
Katie.
like to add to that just a little bit. If you have somebody that is wanting to build, yes, have them call us. We'll help them find a builder. Somebody just asked if Mike Trepay was the only builder. He's one of the greatest in town, but there are other builders too. So we can definitely help him find, your clients find somebody to build their home.
So, very good. Any other thoughts on new home construction before we move on? Well, this is my last question, which again is what in 2021, local home prices will rise by more than 5%. That's really, really strong appreciation in Kansas. Rise between 2.5% and 5%. Rise between 0 and 2.5%, so really slow. Remain flat. Fall. A little bit of bias in the ranges that I'm giving here, but I think that's consistent with historical patterns. So got 5 responses, get a couple more here. And again, when I'm talking about home prices, primarily I mean existing home prices, but obviously that's connected with new homes and what you're able to sell new homes for. So couple more responses. We've only got 5 there so far. Let's see if we can get those in there.
Put me in at C.
Roger, you're putting in at C, low,
Yes.
slow appreciation. Very good.
Yes.
Well, somebody in there put in rising by more than 5%. Who put in there really, really strong appreciation? So Luke, I didn't scare you away when I asked about state workers.
Well, no, and apparently I'm wrong about how the market can be better. So since everybody believes it'll be better and the interest rates are lower, I mean, I had people get approved at 2.5% last week. That increases their buying power. So you have the same people who can pay more for the same houses, no houses. Now they can pay like $20,000 more than they could and have the same payment. So the prices are going up, and that's appreciation.
Yep. Are you having issues at all with appraisals in the current market in terms of you've got bidding situations, multiple offers, and yet appraisers aren't coming in and saying, no, it's not really worth 20,000 over the asking price? I saw one nod yes, but I think I saw more shaking your head
No.
as no.
I've only had 2 this whole year.
Tim, were you going to share something about appraisals and what you've seen?
I will speak in on this one. What we see a lot of as a lender, you know, they come in and again, we've seen a lot of contracts this summer that are over asking price. And I say, okay, that's great, but it's got to appraise. Don't forget that, you know, because it's not doing any good if you buy it for up here and it doesn't appraise that. We don't think the value's there. But I've had, not a lot, but I've had more than normal that didn't appraise. And so those are always fun discussions to have with buyer, seller, and realtors and everybody. But the only thing we have to go off of is past history. So, because the realtors say that a lot as well, you know, how do you get better, bigger and better homes? It's like, well, I don't have that answer, but I get concerned when I can't find other comparable sales of that type of property at that price.
Anyone else have thoughts about appraisals and those?
Yeah, I think it's a matter of local appraisers versus out-of-town appraisers. So I think that's where you get to be the challenge, is if you've got people who don't know the market, they're from another area. I'm sure very talented, very, you know, qualified individuals. However, there's nuances to a certain area that they don't necessarily know. So I think that's where, you know, we run into challenges. You just got to help educate them. And sometimes, most of the time, they're reasonable, but that's where you run into the challenge.
Sally, you were starting to share something?
We don't have any appraisers here today, do we? Because
No, it's like they got so tired of getting beat up in past years, and now when everybody's pleased with them, they don't come.
we scared them away.
We've got them tied up today, Stan.
Yeah. So, Luke, go ahead.
I've had conversations with agents this year here in Topeka and in Wichita that they say that they don't price the house as high as they think they could because they're afraid of the low appraisal. So
Really?
people might even pay more for houses than the way houses are being priced. That's part of the reason that you've got multiple offers, because I know that if I'm bidding on anything between 90 and 120,000, there's going to be 6 offers, you know. And that agent, I had a conversation with an agent who thought, you know, the price was 90. He thought it was worth 85 and it sold for like 110. So I think the agents are also, I don't know, holding back value in a way, possibly, or just cautious. And that's very interesting to me.
Stan, I think our local appraisers, Darren says local appraiser, are doing a good job keeping up with the market and taking that into consideration. The thing that I sense is getting in the way of closings is that the inspection issues are becoming more of an obstacle to get solved because the buyer feels like, darn, I gave you an offer over asking, so you should fix this.
Right.
And the seller's thinking, yeah, I had 3 other offers just like yours, so never mind. and I think that's the bigger obstacle in getting from contract to close right now. And I don't have any evidence to back that up. It's just an anecdotal thought.
It's those anecdotal thoughts that I look for. Darren, you'd started.
Yeah, I was going to say, I agree. I think that's certainly a challenge. I think the other thing we've noticed more so, not only multiple offers over asking price, but we've seen a lot that have come in with no inspections. So what else can they do in order to get that advantage to get that seller to accept their offer? They're going higher and no inspections, which can be, you know, it's dangerous in some cases on their side because you find issues later on in the house. But
right.
If you're a buyer with an FHA loan or a VA loan, you're not looking very good in competition.
No, you're right.
What are other things that buyers are doing to make themselves more attractive in that bidding process?
Willing to pay cash over if the house doesn't meet the appraised value is what I've been seeing quite a bit.
Yeah, I've seen that.
Okay, not conditional on the appraisal.
And they're
Sally?
writing letters. They're all, well, most of them are writing their personal letters and begging the sellers to take their offer.
And does that make a difference? A really nice personal letter?
Oh, I think sometimes it does.
Yep.
Okay.
When
I
money,
think it depends on how long the sellers own the house.
right.
Right.
If they just own the house 5 years, not as important, but if they've raised their family there, I think it touches their heart.
When money doesn't become the primary driver of a decision for a seller, then yes, it does make a difference.
Yeah.
And I know
Are you-
that,
Go ahead.
no, I was going to say that may seem odd that money's not always a factor, but it's not always the driving factor. It's really, there's a multitude of things that can happen in a transaction that money does not put it at the top of the list.
I always tell people that buying a house is generally the most intimate transaction that any of us will make in our lives. And if you've lived in your house for a long time, it makes perfect sense to me that it matters who buys it. It's been a part of your life. Are you all seeing escalation clauses in offers here? So I've begun hearing about those where I'm offering you, $150,000 and I'll go up to 175 in order to beat the next best offer.
Yep.
So, and is
Some
that
of them
making a difference for?
Some are effective, some aren't.
Okay.
As a buyer, I don't even want to write that. I just want to go straight to the high price, because I feel like the escalation clause is not, like, the sellers are thinking, well, the other ones are higher. They made a better effort first. Sorry, I don't like you. I'll take another one, a different offer. I don't know if that's true or not, but.
Okay. Well, we are just about out of time, and I really try and honor and respect your time. So let me ask, are there any other issues or questions that we've not discussed that you thought, man, I was really expecting Stan to talk about this today, something that you're seeing in the market that we've not brought up?
Stan, I'd like to add to that. I know this may not affect existing homes, but it does affect new construction. And then we're seeing buyers that want a specific type of appliance or want fencing or something like that is in really short supply because maybe it's COVID, but from what I've been told, there's just a huge demand for these outdoor projects. And in addition to the appliances, we've had several homes that we couldn't get closed because we couldn't get all their fence stuff done, and the lender changed their policy because of COVID that they're not going to close it unless everything's done. So we've had to start rewriting our contracts to say, hey, if we can't get your fence in time, then it's not going to be part of the contract. And then we've also had to be very careful about the appliances to make sure that we can actually get them. And in fact, we have multiple people who have to have loaner appliances just to get them through. Again, that may not affect existing homes, but it's been kind of an interesting minefield to navigate as we try to just make sure we get people to the finish line.
Mike, you're absolutely 100% right. I had it happen here in Topeka and in Lawrence. And,
Okay.
and especially the national lenders. I had one last week with Wells Fargo that we were a month delayed because they couldn't get the appliances. Finally, we had to put a cabinet over it to cover it up, to your point, just to get it through.
Yeah, we were delayed 2 months on a project because we couldn't get the gate for the fence. I mean, I'm like, all right, we can't work hard enough to make sure our buyers are with local lenders who will be able to do a better job and not have those same constraints placed on them. It just doesn't make no sense. And these poor people, I mean, they want to get in their home and they can't, I mean, we want to actually get paid too, and we can't. So.
Yeah. Well, any other last thoughts? Well, I want to thank everybody very, very much. This is extremely useful for me. I hope it's useful for you. As we said, the 2021 Topeka housing forecast will be released in conjunction with the Kansas Association of Realtors annual convention. So it's a virtual event this year, so I hope you all can join us, and I'll be presenting that there. We will be printing the forecasts again, and I want to give a big thank you to Security First Title. Tina, we haven't heard anything from you here today, but I know you're there, and also to Cap Fed for sponsoring the forecast and making those printed publications available. And once again, we'll get those distributed to you. So Linda, any last thoughts or anything from the board office before we close things up today?
No, I mean, it's always really good to hear what everybody in the field is experiencing. You know, I get to see what I read online, and that's not always applicable to local markets. So I always enjoy this. So thank you all for participating.
Well, thank you all very much. And as I said, I will pass on the link to this recording and give it to the board office so that they can decide what the appropriate way to distribute it or not distribute it is. So it'll purely be up to your board. And I'll get you a copy of all of the poll results we have, so you have all that information as well. With that, we can say thank you very much, and you all have a great day.